Happy Tuesday, everybody. I hope you had a great long Memorial Day weekend. Welcome back to reality and the new week. Today is May 31st, 2022, and this is your Tuesday market update. Let's jump right in, review what happened last week, and what will we watch for this week. What a relief rally last week. Did it change your mind? Did so much change in a week? Let's talk about what happened, what changed, and what it means. Market opened the week with a rally on Monday on optimism that we'd see some tariff rollback with China. We also heard some encouragement from Jamie Dimon with JP Morgan, as well as Citi's Fraser. They talked about the overall health of the economy, as well as prospects of easing commodity prices. Big news from Bostic of the Fed when he introduced the idea of a Fed pause later in the summer. Maybe they'll raise, then they'll wait to see how higher interest rates move through the system. Makes sense? S&P 500 was up 1.86%, the Dow was up just under 2%, and the NASDAQ up a bit over 1.5%. Tuesdays, we started with reaction to more bad earnings, this time from Snap, and the market extrapolated macro data from that. There was also some disappointments in eco data, and a strong two-year Treasury auction kept us off the lows of the day, and the S&P 500 closed down 0.81%. The Dow eked out a slight gain, and the NASDAQ was down another 2.35%. Selling continued into Wednesday early, but the market got its legs underneath itself, and the markets and the algos, the computers, they got ready for the Fed minutes that we spoke about last week. These minutes were less hawkish than feared, another strong Treasury auction, this time the 5-year, and that sentiment, along with the computers, took the market higher again. Up just under 1% on the S&P, just over 0.5% on the Dow, and the NASDAQ, with the oversized results as usual, up about 1.5%. Rally continued on Thursday as earnings disappointments and news from bellwethers NVIDIA and Apple were ignored. The markets followed the winners of the day: Macy's, Dollar Tree, Dollar General. A turnaround from the Walmart and Target of the week before. Q1 GDP info opened our eyes to better than expected consumer spending, and that, remember, is over 70% of our economy. Anything to worry about here? More spending, less savings. It starts to eat into people's piggy banks. So how long does that last? We'll have to see. Jobless claims started to come back down. Makes sense. We'll hear this week the JOLTS report. Remember, we expect to see that number over 11 million still job openings. Overall, the S&P 500 was up just under 2%. The Dow was up over 1.5%. And the NASDAQ up over 2.5%. We saw stocks open higher on Friday as we got personal incomes and outlays reports. Are you ever surprised that we seem to keep coming up with new important economic numbers? There are a ton of them. Again, consumer spending accelerated. That's what the focus was. Markets like that, they ignored the personal income is down, back to spending more, busting open that piggy bank, maybe to fill up the gas tank. Wow, I did that this weekend. The key number was really responsible. The key number that was really responsible for a lot of the positive vibe was that core PCI price index that we're waiting for, the Fed's favorite gauge of inflation. It did pull back from multi-decade highs. Peak inflation, that's the question. I've told you that I think we've seen that, but we do need to start seeing things going down. Not going up is good, but we must start to fall back to earth. CPI is still in the 8s, and we need to get that back to the 3 to 5% range. Friday ended a strong week. The Dow was up 1.8%, S&P 500 up 2.5%, the NASDAQ up 3.3%. For the week, all three indices ended up with a 6 handle, 6% plus for each of the indices on the week. What will this week bring? This is a simple but more important week. A big one is not until Friday, the monthly jobs report, and all the data that comes along with that, hourly earnings, unemployment rate, participation rate. We'll dissect it all over the place, but that's on Friday. Before that, we'll hear from Fed heads. Powell is meeting with Biden today at the White House. Not sure this will produce anything but a photo op, but we did hear from Waller overnight. Not too encouraging. He's the "what pause are you talking about" camp. We'll hear from Williams, Bullard, Logan, Mester, and Brainerd this week, and we'll get a lot of other data. I think the Beige Book will be of interest. Wednesday, that's a summary of regional economic reports. Are we rolling over anywhere specifically in the country? What is the worry on that particular thing? We'll just have to see. Let's keep an eye on the keys to the bottom of the market. Remember, we talked about that. The talk of the tape today. Did we put the bottom in yet? Remember, we spoke about 3 main things that we're going to focus on. 1, China and the lockdowns. We're starting to see that ease a bit. Shanghai is reopening slowly. Factories and schools are starting up again. And the good news is that Beijing has not followed the worst lockdowns, so not as bad. China's better. A long way to go, but better. Next key, inflation is peaking and declining. As I mentioned before and last week, the cessation of bad news is not going to be enough. And the peak will be a good start, but we need to start coming back down. Today's oil action, not helping with that. We are seeing signs of the peak, but let's keep an eye out for the news that tells us something good is coming. in the decline. The third key, geopolitics. Not anything material to report here. As I've told you, I still think Putin's going to end up claiming the Donbass region and cooling off, maybe even come to the peace tables. But I'm not going to pretend this is my expertise. It is not. Overall, we are not seeing any progress here. So the markets have been oversold. We may get some more moves up. If this overall environment has you worried, let's talk. A 6% move last week takes us to only down 12% of the S&P 500. I know only, but really only. Let's talk and see if you're in the allocation you want to be in. We're opening a bit soft today, but let's see what this week brings. There's a lot of news, but sentiment and the algos are going to drive this one. Please stay in touch. Let's talk about your allocations and planning for your goals. Now is the time to do that, as always. So have a great week, and let's stay in touch.